I'm Sari Kimball, and I've done just about everything in the food industry. I have helped hundreds of packaged food business entrepreneurs, and now I want to help you make your delicious dream a reality. Whether you want to be successful at farmers markets, online, or wholesale onto store shelves, food business success is your secret ingredient. I will show you how to avoid an expensive hobby and instead run a profitable food business. Now let's jump in. Welcome back, everyone, to the podcast. We are continuing our money series, and I'm really excited to welcome Lorne Noble today. And Lorne is a finance whiz who loves playing with Excel sheets, after my own heart. He spent 12 years in London, has a great accent, and he spent 12 years in London as an investment analyst before making the jump to Boulder, Colorado. He acts as a finance mentor to high-impact companies and ultimately co-founding Simple Startup. And Simple Startup helps entrepreneurs to simplify their finances, truly understand their numbers, and make smart, informed business decisions. So welcome, Lorne. I'm really grateful for you to be here. You're going to have so much great stuff for the listeners.
Great. Well, Sari, thank you very much for having me. It's a pleasure to be here.
Yeah. So we were just talking about Simple Startup. So just very quickly, I explained who my listeners are, but what level of businesses do you serve in Simple Startup?
Yeah, absolutely. So I think quickly just going to give an idea of Simple Startup. We have three core pillars to our business. And so we have tax support, tax filing support, which everyone's going through right now. One of those things is death and taxes, the only two certainties in life, right? And then we have finance support, so we're helping clients look forward with their numbers, and accounting support, which is really collection and organization of the past. Those are our three core pillars. And we really help companies that are in kind of growth stage, trying to kind of grow their businesses. But once they've really kind of validated their product, once they've kind of got a proof of market, product market fit, etc., and maybe they're doing anything sort of 100,000 or so in annual revenues, and we support them all the way through to 10 million plus in annual revenues when they start taking a lot of their accounting, finance, and tax support in-house.
Yeah, perfect. Well, you are definitely the right person for this episode. So let's jump in. We have so many great topics I want to talk about, but let's just talk kind of that general startup financial strategy. So important. Money's not the easiest thing for people to talk about. And, a lot of people are very idealistic, very passionate about their product, but now we got to deal with money, finances, being a real business. So what are some tips you have for building a sustainable business model and going forward in that?
Yeah, great question. And it's a difficult one to answer because, everyone has a slightly different opinion. But for me, I think it comes down to simple economics. And everyone's going to gasp, what do you mean economics? I don't like economics. Don't answer a question with an answer, with economics in it. But basically speaking, it all comes down to supply and demand, right? So every business has supply and every business has demand. And that's really the core of every business. So supply is not without its complexities and challenges, but usually demand is the harder one to predict. And so for companies starting out, demand is really hard. So the ethos of what I'm trying to say here is don't build a product that nobody wants to buy. Don't create a product that nobody wants to buy. The biggest issue with small businesses, in my experience, is that they think because they're passionate about their own problem and solution, that many, many others will be. So my kind of conclusion to this would be focus on a problem specific, not product specific. So if you focus on the problem, the better solution will appear. If you focus on the solution, you'll likely never get the buy-in that you're looking for. And then the final dynamic that I would add there is be customer centric. So problem specific and customer centric. That's what I believe creates a really good sustainable business model.
I love that. I thought we were going to talk about money, but we're talking about we're talking about validating your problem, not being so locked into your one product, but really what does the market need? How can I best serve and show up with the best product? And being willing to use that, somewhat overused term of pivoting, right? And how can I constantly be serving my clients the best.
Yeah, I would say constantly innovating.
Yeah, I love it. Okay, so what misconceptions about finances do people in early stage startups have when they get going?
So I think it's very similar to that previous kind of question that the answer I was giving was the misconception that I find that they have is, the build it and they will come. And that's just sort of evidencing what I was saying earlier is like, that's usually the problem. And the misconceptions also is that I will be able to build my business and support all of the costs that business may need. And usually what happens is that people project more income and under project the expense. And so the reality is, then you have this struggling kind of cash flow scenario. So always ensure that when you look at trying to build and forecast your business and suggest that this is a great business model to create, really try and focus in on the numbers. The passion behind the product is always there for every entrepreneur. But from my perspective, ensure that that's grounded on a good understanding of the numbers and how many products you have to sell to actually break even.
Right. Oh, I couldn't agree more. I mean, I work with people in food business success as well with their cost of goods sold, doing some initial, like, how much is this actually going to cost me to get started? And then, of course, some forecasting, which, like you said, we typically overestimate how much revenue and underestimate how much it's going to cost, that supply and demand piece. But I guess maybe just explain what is a financial model? Like, let's just go way, way back to because a lot of my folks don't have any business experience whatsoever. Like, they've never been an entrepreneur.
Yeah. So to me, a financial model is actually quite simple. It's scary. The term scares a lot of people, but really all it is your best guess of what's going to happen tomorrow. And trying to put some numbers to those best guesses. So a financial model, and that's really what it is at its core, but a financial model, as you start to build it out, you suddenly realize that it is purely assumptions based on assumptions based on assumptions, right? And the only way to know if those assumptions are true and or valid is to actually get out there into the marketplace and experiment in real time. So the expression, I believe, from the book, what it was, it called the lean startup, I think it's called, is great. Just the whole validation loop of getting out of the building to validate or perhaps invalidate the assumptions that you've created in your financial projections. And that is the goal. Once you create these projections, the goal is to go out there and to prove them right or prove them wrong. Neither is better or worse than each other. You're getting out there and proving it quickly. And what does that allow you to do? That allows you to modify your business, optimize your business, and then better meet the needs of your customers.
Yeah, take action and fail quickly, fail fast, right?
Exactly.
Say that way you can go back and tweak and reorganize. I either get people who like head in the sand, like do not want to talk about money, like I kind of penciled it out on paper and it works, or they like overindulge, but they don't take action, right? And so you need a little bit of both.
Exactly. It's a blend. And depending on the stage of the business, there will be a different blend as well, based on the needs of the business and the complexity of the business, and therefore the sophistication of the accounting and or finances required.
All right. Wow. That's a great segue. Let's just get into accounting. What? Ooh. Yeah. The real nitty gritty, the least sexy part of running a business, but the most required. So how can people set up a great accounting foundation? I have people that either just work in spreadsheets or maybe don't do anything at all, or, try their hand at QuickBooks. But pretty novice. So where do people start? Where do you recommend?
Great question. Well, I think always start. That's the point. Don't bury your head in the sand. Like, something is better than nothing. And so I think the real kind of answer to this question is like the why behind sound accounting foundations and why that's kind of integral to kind of achieving sustainable growth. So, at Simple Startup, we truly believe that the role of numbers in your business is like the core component to making better management decisions. And so the reality is you cannot make these decisions without organizing your numbers, again, in some way. Something is better than nothing. So organize your numbers in some way, and that is what accounting is at its core. So if you're super early stage, that could just be the case of keeping a track of something on an Excel spreadsheet. However, a more sophisticated and a company and an entrepreneur and a leader who's wanting to grow that business will use an accounting system to help them collect and organize all of those accounting records. And I highly encourage, it's not super expensive with cloud computing these days. You've got companies like Xero and QuickBooks, all of them, okay, yes, it may be $50 to $100 a month or so. It's not super expensive, but it does become the place upon which you can collect your accounting records, you can report out of, and you can actually make better management decisions.
Yeah, 100%. I mean, between doing cash flow and then weekly, transaction reconciliation, like that's how we make better decisions. That's how we decide when we can buy that packaging, when we should do that launch, when we should make that run through the co-packer. And when we don't use those numbers, we're really setting ourselves up for it's just kind of this nebulous thing. And we feel I think it leads to just feeling really out of control. And
Absolutely. And so like to that point is not only is it the organization of your records, but it helps to relieve anxiety because you know that there's an element of control there.
Yeah.
And so like accounting, and I also hasten to add that good quality accounting is the foundation upon which you can see trends, you can analyze efficiencies, you can spot problems, and hence you can grow your business. And the age-old expression is that numbers don't lie.
Yep. I like to say, let's take the drama out of it and just numbers are math, right? They give you information, they give you data, and then we can make decisions. But I think we wrap up a lot of drama into those numbers, but let's take the drama out. So what is the difference between bookkeeping and accounting? And are there ones that you should outsource versus keep in-house, or how do you recommend people set that up?
Yeah, and it's a great question. And so very, very quick answer is yes, there is a large difference between bookkeeping and accounting, in my opinion. To do accounting, clearly there needs to be bookkeeping performed, but the difference between bookkeeping and accounting is quite large. So for me, a bookkeeper keeps the simplistic records in a general ledger on of your financial transactions. And this is often without the support of an accountant. An accountant, in theory, is a higher level, more sophisticated person with deeper level of knowledge and understanding. So basically, what is bookkeeping? It is the act of recording and classifying those transactions through what's called like double entry kind of accounting, and provides information from which those accounts are prepared. The difference between that and accountants or bookkeepers and accountants is really that accountants are bookkeepers on steroids. So they apply a wider, more sophisticated concepts to the simple components of bookkeeping. So they understand the correct rules, the regulations of accounting. Think about how your financial information is tied to your taxes and viewed by your investors and or your auditors, for instance, especially as you grow as an organization. So accountants better understand that and the importance of workflows, consistency in reporting, creating a level of predictability, financial security, all of those sorts of things is where an accountant brings more skill set and understanding versus a bookkeeper.
Okay. And do you recommend, like, can a business kind of keep their bookkeeping up like on a consistent basis and then use an accountant, or do you recommend kind of having both?
Yes, and I think to answer the question is all of this really depends at what stage of business that you're at. So as you're starting out and you're kind of hustling and you're ultimately trying to prove a product market fit, Like, you don't need to have a kind of CPA overseeing very few transactions. And so take it all kind of with a bit of relativity. At the beginning stages, you just want someone to be keeping a track of things in your accounting records. And there's not a lot of data maybe at that beginning stage.
Right.
So from that beginning stage, all you really need is when you come around to kind of tax season, it's ready for tax purposes. But when you start to actually have a little bit more data there, and you start to see that there are transactions, you start to see patterns in your data, you start to see the ability of extracting gross margins, which is how efficient are you at delivering sales. At that point, that's when you want to move the sophistication of your accounting and finance support into someone who can really help to organize your data in the right way, and then also help you interpret what it's saying.
Okay. So I'm going to ask you some kind of nitty gritty, like questions that I've definitely been getting. Well, it's things I keep seeing with clients. So first of all, do you have any tips for just kind of general setup? Like, let's say you get QuickBooks and you've never really used an accounting tool. Now, one thing I want to keep in mind is that we're talking about a, product-based business, and we're not talking about t-shirts. We're talking about generally like self-manufacturing. So we own all of the cost of goods, both from a individual ingredient packaging standpoint, and then they get all put into a product, right? That then sits in inventory. So I know I get questions about like, should I use the inventory function in QuickBooks, or just like generally, how do I categorize things? So I don't know if you can give us just kind of a high, like, we're not going to get super into the weeds, but like
a high level,
like tips for setting up your books when you're first starting.
Yeah. And I think it's always painful to try and unpick something that hasn't been done right from the start. And it can become more costly to do so. So I always say, get great advice and support from someone who knows what they're doing. And inventory management and inventory accounting is a complicated procedure to make sure that you're showing what should be on your balance sheet versus what should be on your income statement. Yep. But to answer your question, top tips. So you're a product company, and the assumption here is that you are not co-packing, and you're not just ultimately buying your finished product from your co-packer.
Yes.
So therefore, you have gone into this business and you're actually manufacturing your products, and that's great. Now, I'm trying to bear in mind that there's for a young company that's in their kitchen producing their own food product and selling it at a kind of a local food market. There's top tips for that, and then I'll give a top tip to someone who's a bit more advanced.
Okay.
So for someone there, what you want to be doing is to be collecting and understanding clearly of all of the ingredients costs, the amount of waste that may be going. In other words, hey, I do a production run in my kitchen. I've bought $100 of this, $200 of this, $500 of this, and I do my production run. So I know my hard costs. But there's a lot of soft costs that forget to be added to those hard costs, such as, what is the electricity that's going through my kitchen to kind of like go into the production of this particular product run? What is the time that I am taking as an owner to go into this? And take market-based salaries. Like, if I was to employ someone else, what would it cost to get them here on an hourly basis to produce this production run? And could they do it with the same quality? Right. So you're trying to add in all of these costs. And so what your very, very simple mathematics is to say, what are all those costs, and how many products am I able to make? How much waste is there? How many products am I able to make? That becomes your ultimately standard cost for the product that you are going to go and sell.
Mm-hmm.
So the hard costs, and don't forget to capture a lot of those soft costs. Okay. And so when you have that knowledge, then what you can do in your accounting records, what's going to happen is that all of that should get booked by a bookkeeper or an accountant into inventory on your balance sheet.
Okay.
All of those costs go into your balance sheet as inventory. Then the ideal is when you make the sale, you move that cost from inventory into cost of goods sold. And so a bookkeeper or an accountant is going to know how to do that. And some systems do that process for you, like QuickBooks. They have this integrated sort of inventory system. And they would then, when you make a sale, they're saying, where is this coming from? And it automatically moves it from your inventory into cost of goods sold.
Right.
The challenge, though, now I'm segueing into a slightly larger company. And the challenge here is that if you want good inventory systems, you ultimately have to pay quite a lot of money for it. And the challenge is for young companies in this industry is there's not usually the budget for that type of inventory system.
Yeah.
And so what we find for younger companies is that we help support our younger companies with our own backup schedules that allow us to do what I just described and to arrive at a standard cost. And that allows us to then move and help them move inventory into cost of goods sold.
Yeah.
So that's high level. And I know that I'm getting probably more detailed than we need to, but that's roughly speaking how it goes.
I think that's the big challenge. Well, I think that piece is what I see as one of the big challenges, things not getting set up correctly. The moving around like between a balance sheet and then your, profit and loss statement, that inventory that we're just holding. And then I think what I often see is like the tangled mess of what they've tried to, they've tried to figure it out and then untangling it. And I always say, like, I am not an accountant. I am not a bookkeeper. I know QuickBooks enough to be dangerous. And, I always say, like, you got to go get somebody to help you untangle this, but we need clean numbers, right? Like, it's really important to have.
Exactly. You need clean numbers because those clean numbers is the foundation, in my opinion, of your business. And without an understanding of the numbers, without an understanding of your margins on a per product basis, you really don't know which ones you should be focusing on to build your business. And really, that is like, driving a car blind, and we all know how that's going to end up.
Well, and we have this great tool, but then it's not getting used. And then because they're like, yeah, it's not correct. There's been double entry, or like I have stuff from 3 years ago that's still sitting on the books. And it's like, you're paying money for this tool that can be super valuable, but we can't even use it. So we'll talk more about how you can help people get set up. But I think getting set up correctly is an investment well worth making if you're going to like really take this to be a bigger business beyond a hobby.
Absolutely. And one of the things that I have noticed in the years of supporting young companies is the leaders and the business owners, or the serial entrepreneurs, clearly are the best people to work with because they've been through it all. But the first time entrepreneurs, those that understand the extent of their abilities and know therefore where their gaps in knowledge are the ones who go out to seek the best possible support to fill their lack in knowledge and understanding. And those are the ones who usually are most successful.
Yep. 100%. They go and find people like me and find people like you to help fill in those knowledge gaps. So exactly. Yeah. All right. Well, let's segue into just overall like financial health, health and habits, which I've been talking a lot about. Rituals and those things that we do in our business weekly or daily to set us up for success, whether that be things like, journal writing or going to bed earlier, but rituals that, filling our brains with great positivity. And then we got to deal with money. And that's definitely a ritual in itself that, successful business owners need to make part of their daily, weekly habits. So tell us about common challenges and pitfalls that you see people falling into around financial health.
Yeah, I think what would I say, the most important area for me there, I think, is that you've got to, the most common challenges is you are the owner of your own business. Now, there are common standards in terms of creation of appropriate financial management, but you're ultimately the owner of your own business, and so it's got to work for you. So what I mean by that is there's no point in hiring someone to put in place these fantastic routine and regimen if you don't understand it. So the first piece I'd say there is you have to make sure that whatever you adopt as a regimen and routine, that you understand it. This is most important. If you don't understand it, you'll never use it, you'll never believe it, and you'll likely never make good decisions from it. So that's kind of the one thing, is to make it super easy for you to understand. You are the owner of your business. You get to make these decisions. Now, if you're hearing people say things over and over again to you and the same things, then it's probably a good idea to listen. There's something called mentor whiplash that we experience and entrepreneurs will experience, where one mentor will say one thing, another mentor will say something else, like, hey, who do I listen to? And all I would say when I mentor companies is, look, what I could tell you is complete and utter crap, right? Because you know your business better than I do. However, if you start hearing other people saying the same things as I do, then you may want to listen. You may want to listen. So in terms of the structure, the routine, and the accountability, I would say, like, build in an exercise plan, right? So, how many people have started an exercise plan and given up on it shortly after, right? The chances are that you haven't implemented the correct structure, routine, and accountability. So when you are on an exercise plan, you take a picture of yourself at the beginning. You take subsequent pictures of yourself each month, no sooner, no later, because then you can see the progress you're making. And that progress gives you the incentive to continue and carry on. So the same thing applies, in my view, with a financial plan. And so here would be my recommendations to anyone building a financial plan for routine, structure, and accountability. So first of all, build a budget. If you don't know where you go, if you don't know where you've been, it's difficult to know where you're going. If you don't know where you're going, you'll never get there. So build the budget for the year ahead. Now, again, start simple. It doesn't have to be complex. Just make it appropriate for you and that you understand. So from that kind of 1 month plan is going to tell you what the financial, or the plan is going to tell you what the financial year ahead looks like for you. Then I would say, take that first 3 months of this budget. Don't just throw that budget in the bin and say, I've done my plan and we're done. I'm off for the year. Put it up on the shelf and forget about it. Take those first 3 months of that budget and track your results against that budget. What did we say we were going to do? How have we performed about what we said we're going to do? We're up here, we're down here. Why are we up? Why are we down? And so that process is called what's like a budget review, a budget versus actuals, or a variance analysis. Okay, so they're all pretty much saying the same thing, but that's what they mean.
Okay.
And the objective here is not to point fingers, but to learn about your business, modify your business. If you need to pivot. If you need to optimize. So what you learn in that first month, what you learn in the second month, and what you learn on the third month will tell you a good trend of what's happening in your business. And then at the end of that first quarter, sit down, look at your budget, and say, do we need to reforecast? Have we learned something that over these 3 months that has resulted in us reforecasting our income or reforecasting our expenses? We've learned something new about our product development, and maybe there are additional costs. And so that is a great process to do each quarter, a great financial plan to carry out each quarter. And it's relatively simple to do, but it just allows you to then reforecast and change your assumptions at the end of each quarter. And that creates this cadence of an annual plan, tracking that plan against actuals each month, and then reforecasting each quarter based on what you're learning. And as Peter Drucker, I don't know if everyone knows Peter Drucker, but as Peter Drucker or Drucker put it, what gets measured gets managed.
Yep. Yeah. Because I think a lot of people are like, okay, even if they do a budget, they're like, yep, done. And then they just do whatever they want. And then
all the good work has gone to waste. It's disheartening.
Right. But this doesn't have to take, I think sometimes we hear like a budget reconciliation or, checking in, and we're like, oh my gosh, this is hours and hours. I mean, I like to say, same thing with cash flow. Like every Monday, you're going to look at your cash flow for 30 minutes. Like if you stay up on it, it doesn't take that long. Would you say the same about what you're talking about there?
Absolutely. And so for a lot of our clients at Simple Startup, we have cash management services, for instance. And each week we would sit down. We do this ourselves. We would sit down with our clients and update our cash management forecast. And so what's really important, especially for young companies without a lot of predictability, you can use that cash management sheet. We do have an academy as well, where cash management is one of our academies. So if anyone wants to have a look at our website, look at our academy, we have cash management as one of these items, and that follows a weekly regimen. 30 minutes each week. Sit down, update it, pull some reports from QuickBooks, and say, when are we going to get money from this customer? When are we going to pay this particular bill? Who have we got on payroll? What are our recurring expenses? What's our recurring income, etc.? And what does the next 90 days of cash look like? And so that routine is great because it gives you time to take action if you're seeing a trend in your cash flow going in a certain direction. It gives you time to raise capital. It gives you time to go to the bank and ask for loan. It gives you time to change your expenses and or chase on customers for collection of cash.
Yeah. And maybe it's, even if you're doing farmers markets or something, it's like, let me go find another market to do, or let me reprice my product. It just gives you so much more information every stage to make decisions, like we talked about. So can you give us some examples of businesses, CPG brands, learning from these financial models and making decisions or making, pivots? So can you share some examples of how CPG business might learn from building and using a financial model in the real world?
Yeah, in the real world. It's a great question. And we've built many financial models, from very, very basic ones all the way through to advanced financial models. What I'd say is the more advanced the financial model, the more features and functionality you have to play with it. So I'm going to give an example here where we've worked with clients who build their own financial model. And what they realize at the end of that is, great, this is my vision. This is what I think I can do on income. This is what I think is going to happen with expenses. And I'm building the company tomorrow, today. So ultimately, I need cash flow in this business. And so I've worked out that I need $1 million. And they go out and they then try and raise $1 million from equity investors to help them achieve that vision. The reality is that most of those companies that do that don't need to. So with a good financial model and with a good person supporting you, they can say, do you actually need $1 million? Or are there things that we can do to change your business model that will have a significant impact on cash and mean that you don't need to raise as much? And if you don't need to raise as much, you can spend less time going and brushing shoulders with investors, and you can spend more time building your business. And as a result, there will be less dilution in your business. There'll be more ownership in your company for yourself.
Yeah, you're not giving away as much.
Exactly, you're not giving away as much. And so really what we do with many of our clients is to say, ask that question. Is there anything we can do for your business model before we just inadvertently go out and try and raise investor capital with you? And so what we've seen there is that company that was looking to raise approximately $1 million, we actually found out that if we were to change some of their vendor terms and change some of their customer terms, where they are not out of money so much, and if we were to go in and actually say, well, maybe we should finance some of your receivables. So what does that mean? That means selling some of your invoices. And maybe we should also try and get some vendor financing from your suppliers, for instance, or change the terms with your suppliers.
Yep.
All of those conversations resulted in this company not needing $1 million, but actually needing closer to $250,000. And so without that level of understanding and changing some of their business model, they would have gone out, raised investor money, which is very expensive, by the way, because investors will ultimately price their money at 30% per annum sort of things. It's more expensive than a credit card if your company is doing well. Clearly, if your company doesn't do well, it's very cheap, but it is expensive capital. So you always think about that and then make sure that you are financing your company in the right way based on the circumstances in your company.
Yeah. Well, in a financial model, it is a guess. I mean, it's our best educated guess, but then you can take one model and save it and then start a new one and say, okay, well, what if we added this new sales channel, or if we added a farmer's market? Well, there's costs involved with the upfront costs with that market, but then what does that look like? And again, we got to test it and come back and measure it, because like these are all just guesses.
Yeah, absolutely. And that is, we were talking about this earlier, where we were mentioning that the power is going out to validate or invalidate your assumptions. We all know that these assumptions are our best guesses, and that shouldn't stop you from making an assumption. We know that it could be right and it could be wrong. And a lot of people, entrepreneurs are usually a little more confident, but generally speaking, a lot of people are afraid of being wrong. And that is a hugely debilitating kind of like mindset to get into, and that will hinder your growth. So don't be afraid of being wrong, right? You will always be wrong in your entrepreneurial journey to some degree or another. All that we're saying that you should be trying to implement is learn when you are not correct and learn what therefore may be a more correct next assumption.
Yeah. Jim Collins talks about the cannon versus the bullet effect. So go and test in little ways, right? Shoot the one bullet and shoot another bullet and shoot another bullet before you launch the big cannon. Like if you only have limited amount of firepower, limited amount of cash, right?
Yep.
Go and test in a small way, and then you know where to put the big push at. But that's great.
Yeah, and I would say that there's ultimately something very inspiring about young entrepreneurs, because they get out there and they hustle, and they can do so many things that an incumbent cannot. They can move much faster. They're the nimble gazelle, where you kind of got the line. And I think the analogy is, look, no matter whether you're this large incumbent and you're this big company, you're the lion on the African plains, for instance, versus the gazelle, right? Both, when the gazelle gets up in the morning and it has to run faster than the lion gets up in the morning and it has to run as fast as, if not faster than, the gazelle. Either if neither of them do that, one of them will die.
Yes.
Or both of them will die, rather.
So, what about or I guess, where do people, at what point do you recommend starting to raise money, or versus like being self-funded for as long as possible? Is there kind of a magic number, or is it really just based on the unique business and their model?
Yeah, and I think it is always very unique, but I think the one defining factor is, are we going to run out of capital? And is our plan, again, making sure that everyone has a plan, does that plan mean that we need to raise capital? And so when do you need to raise it? Ultimately, that plan is helping to inform an answer to that question. Your cash management that you do on a weekly basis is helping to inform an answer to that question. The core thing here, though, is how long does it take to raise capital? So if you can see that your projection is saying that you're going to be out of capital in 3 months, is 3 months actually enough to raise capital? And again, that's somewhat dependent on how much you're trying to raise,
sure,
and from who. But let's say that you're saying, I need to raise $500,000 in 3 months. The chances are slim of you receiving all of those investor checks then. So the one defining factor clearly is what your cash forecast and is suggesting. And the other one is competitive landscape. And if you're doing something that is significant and has a first mover advantage, for instance, you could continue to actually be operating profitably as a small business delivering on this. However, is there a greater opportunity out there for you as a firm? Is there a potential competitor landscape arriving? You first to market here, and if you're first to market, there is a potentially greater need for you to raise capital sooner so that you can generate market share before others come in and steal that market share.
Yeah, and that's really where you need that that guide and mentor who understands. I mean, you work in the CPG industry, I work in the CPG industry, like. Because we know some of those things to anticipate. I mean, I have people come to me and say, I'm gonna create this product and I'm gonna be in Walmart or, National Kroger in 3 months. And I'm like, no, let me give you a taste of like the truth, right? And so I'm sure you see these things all the time. And so you have a lot more perspective than people just in their first business, right?
Exactly. And I would say, again, a lot of this comes back to having a financial plan, because the time frame is part of that financial plan. Getting advice from people who've been through it a number of times, who can say, "Oh, that assumption feels really off.
Yep.
I don't think that that's going to be possible." Those are great pieces of feedback to modify and improve your financial plan. Again, before you go out and raise capital with someone who's then going to say, "I'm not going to give you money because you clearly don't understand." So gain as much networking, right? Speak to people in the industry. It's amazing, in Colorado and across the startup community as a whole, how many people are willing to just impart their knowledge and help support you in your journey. So if you don't ask, you don't get.
Yep. 100%. We're very fortunate to have so many great organizations, but there are great organizations all over the country that help you, find those other connections. People building a community is super important. Well, before you need money.
Yes. To that point, sorry, just to add one other thing. When you're starting to court investors, I would always say, it's in a normal, again, it all depends, but you should never assume that you're going to receive any capital within 6 months, right? Never, just as a rule of thumb, never assume that you'll receive investor checks within that 6 months, especially if you haven't nurtured those relationships. So that's the point here is, if you do plan as an organization and as an individual to be raising investor capital at some point in the future, start those relationships now. Have those conversations now. There's nothing wrong with reaching out to potential investors in this CPG space who support companies. All they'll say is, "Hey, thanks for communicating with me. You're super early for me, and we're not interested in you at your size at the moment, but thanks for reaching out. Do keep us updated." That is the prime opportunity for you to then say, "Wonderful. Would you mind if I keep you updated on my regular, quarterly kind of updates, and then we can kind of keep the relationship building?" That is the relationship building. So when it comes time to actually raise that capital, you know this person, they know you, you've delivered on what you promised, and the process of the due diligence is just so much easier.
Yeah. And, I always describe getting into this world of CPG as a stair step versus I know in startup world, there's kind of the valley of death and then it rises up, but it's like one nice linear graph. But I feel like in the food industry, it's more like a stair step where we can start really small, like at a farmer's market, cottage food even, and the investment's really pretty small. I say $500 to $1,000 to even get in that space. But then every time you scale up and you want to grow and you want to get more efficient, and you want to go into new markets, you have to keep going up and doing another stair step. And then you go through the same process again. And with each process, it's longer and longer, right? There is no overnight $500,000, like you said. Maybe you can get a friends and family loan for a couple thousand or something, raise some smaller money when you're on the lower rung of things. But that's where you want to really have good financial sustainability and health at the very beginning to make your life easier as you go through that.
Yeah, and all of that comes down to visibility and transparency, because from there, you can then own the numbers rather than the numbers owning you.
That's really good. Great quote. I think that's so important because it takes away all that anxiety and feeling like you're at the mercy of these numbers, instead saying, no, I'm making choices based on the data and I'm owning my numbers. So good. Yep. Okay. Well, I would love for you to tell us a little bit more about Simple Startup. And I know you have a great course. We're going to put all the links in the show notes, but do you help people with some of the setup? Like, what is your financial modeling course all about and what you offer?
Yeah, the core of our academy offering here at Simple Startup is to take our learning and apply that into a self-paced course. And the reason behind that is I suppose, I would say that I was disgusted at the fact that only those that could afford a good CFO could get the good advice.
Yeah.
And that really just disgusted me. Like, that doesn't help our young companies grow and create great products that we're going to need tomorrow. So that's the ethos behind our academy. And so we've taken all of our CFO knowledge and we've distilled that down into consumer packaged goods specific financial modeling and plans. And we have a 5-module course, and it's called our Fill in the Blanks Consumer Packaged Goods Specific Industry course. And this will take you through over 5 weeks, drip feeding information to you over 5 weeks, so you don't feel overwhelmed, how to look at a financial model, giving you the tool to use that I described earlier to say, you may not need $1 million. Actually, you only need 250,000. So giving the ability to change these assumptions on the fly. And we take you through that course, looking at the income statement, looking at how you're driving revenue, looking at how the costs are associated to that revenue, looking at the type of team that you need to actually deliver on that, on that particular plan, looking at the balance sheet, and the balance sheet's often forgotten. Right? We talked about inventory earlier today. The balance sheet is often forgotten, but the balance sheet and the profit and loss both drive cash flow, and cash is what's super important for your business. So this model will take you through this entire 5-step process, 5-week process to truly understand your business. And I would close to say that anyone raising investor capital, like there's this rubber stamp of I need a financial model. And so people generally, like, that's their trigger for going out and doing this. I need this rubber stamp.
Yep.
It's part of my due diligence.
For a loan or
I'm applying for my loan.
or...
It's part of this process, etc. But what they fail to realize in advance of coming on this course, and what they realize shortly afterwards, is that it's not the financial model that is the important thing. It's the evolution and process of your learning through developing that financial model that makes you a better leader.
Yep. It's the journey, right? It's like who you're becoming. You're becoming the business owner that knows their finance numbers, that knows the ins and outs of their business. So I love that. It's not just what you get at the end, but it's the process and the evolution along the way. That's great.
Absolutely.
So we have the link will be in the show notes, and then you've been very generous, and there's a 10% off code, Success 2021. We'll put that down there too. But I was actually just on it this morning. I was peeking around, and I mean, for the price, it's amazing because you get some time with you, right, or your group as well, so you can actually check your assumptions and ask these questions. Because Absolutely. To your point earlier about you're just in the silo in a vacuum and you don't understand why you're doing something, you're not gonna make a habit out of it. It's not gonna live on.
Yeah, absolutely, Sarah. Thank you for bringing that up. Yeah, it's not just a self-paced online course. Right? We don't want to leave you there. The reality is people who sign up for online courses stop halfway through or even don't even get halfway through. Our goal is to help support you live through this 5-week course. And so each week we sit down with you and with others kind of going through the course, and we have a Q&A session. And that Q&A can be specific on, hey, I'm learning about this particular module. How do I apply this concept to the model, right? Because we need to make it relevant for everyone. And it needs to be able to apply your business to this tool. If you can't apply it, you won't use the tool. So we want to make sure that we can help support you with that application, but also answer any questions of anxiety that you may have. I'm struggling on this section, or actually, I've got an investor meeting coming up, and am I ready to present this yet?
Yeah.
Or what's going on here? So we help answer all of those questions. And our core goal here, I said at the beginning of this thing, is to help you make better management decisions from great financial data. And if we want to empower you to have those phenomenal investor meetings, empower you to know your business inside out, and therefore empower you to drive your business to great success.
I love it. And I love that you guys created that course and what you're doing. I mean, that's the same how I structure food business success is like, I've taken plenty of online courses and never finished them. And then I was like, you got to have that one-on-one time or group time of talking with somebody. That's what's going to help keep you moving and making sure you get questions answered. So I love that you created that. And certainly, I mean, when we talk about hiring a CFO or even just a fractional CFO where you're just bringing in somebody for a couple hours a month or a week, it's much more expensive than a course like this. And, when people just want to be like, I'll just have somebody else do all of it, I really do want them to learn it first. And then if they want to hand it off to a bookkeeper or a staff, but like you as the business owner really need to know this before you hand it off.
Exactly. I think that, you can be a business leader that doesn't know it, but that doesn't say much for the probability of your success.
Yeah.
So I highly encourage, and we're very in our approach as well. There's no such thing as a stupid question.
Yeah.
Right? Anyone has a question, a burning desire to ask something. We create a very safe environment upon which you can ask those questions. Especially as well, like if there's a question that you don't feel you can ask on the forum wall that we have as well. We have a forum throughout the week that our CFOs respond to. We have the end of the week kind of CFO kind of live. But again, if there's a question that hey, I don't feel comfortable asking this because I feel like I should know it, but I don't, I'm embarrassed. There's also other opportunities upon which we can ask that, and then we can just bring it back to the group. This is where the value is. We bring it back to the group in a sort of an anonymized, confidential manner.
Sure.
But because if you're asking the question, the reality is 8 out of 10 people have got the same question.
Yeah. So good. And you guys are on Facebook, Instagram, LinkedIn. Of course, you can go to your website. We'll put all of those links in the show notes. So what's kind of your parting words of wisdom? Like, what's that last golden nugget?
I'm going to be very, very honest with you that the first thing that came to my mind was a Warren Miller quote. And I think Warren Miller quoted this as opposed to he didn't steal it from someone else. Well, I'm sure we all steal each other's quotes.
Yeah.
But his quote was, if you don't do it this year, you'll be 1 year older when you do.
I love it. Start now.
Exactly.
That's the takeaway. Start with a spreadsheet, start somewhere, but just start.
Exactly.
Love it. All right. Well, thank you so much, Lorne, for joining me today. This is going to be so helpful. And all of the links you need are down below in the show notes to go check out Simple Startup and the Food Business Success Cash Flow course as well. So thank you for doing what you're doing, and thank you for joining me.
Thank you for having me.
Oh my gosh, that was so good. What other questions do you have about your setup, some of these basic functions of running a business where your profit and your money and your cost of goods sold is concerned? Head over to the private Facebook group and leave me your questions, and I will get Lorne in there to answer them for you. I'd love to know where you're getting stuck. And until next time, have an amazing week. Are you ready to start that delicious idea that you make in your home kitchen or grow your existing packaged food business and take it to the next level? The most successful food business entrepreneurs have support, guidance, focus, and accountability to help them make it happen quickly without wasting time or money. Plus, I think starting your packaged food business should actually be fun. Food business success is your secret ingredient to creating your food business dream. Please don't go this alone. Check out the private free Food Business Success Facebook group to connect with other foodpreneurs, get your questions answered quickly, share your wins, and receive special training and tools I only share inside the private community. Just search for Food Business Success on Facebook or get the link in the show notes. Curious about how Food Business Success can help you? Head over to foodbizsuccess.com and fill out the application to see if you're a great fit for the program. Together, let's make your food business dream a reality.